So good evening watu wangu. Najua people are busy. Getting time maybe to have an online class is becoming challenging, but that will not now prevent us from learning. So allow us take you step by step in a short video on our lesson number 3, which was how to identify up trade, down trade, or consolidation. So before I even tell you what is this, I will want to draw some things here to teach you three things: how to know what is an up trade, how to know what is a down trade, and how to know what is a consolidation. So I will go step by step, and just to explain to you, when we have candlesticks that I know I've shared some videos with you about, when the candlesticks are moving up, the market will never move in a straight line. So it moves in such kind of a way. Let me just leave it there. So it will move up, then look like it's coming down, move up again, look look like again it's coming down, up, down, up, down. And that's how the market moves. Now the distance between whether it comes down to this step or up to this step is not always like predictable. But now you will learn with time that you are able maybe to use some indicators and strategies to predict how far it will go. Now, if you look at my trend here, if I drew a line down here, don't worry about what I'm doing here. This is called a trading view account. It's a free account. I'll show you how to open one. But if I did draw my starting point and my end point, let me call it maybe parameters here. Sorry, you realize that I am going on an uptrend. I am going on an uptrend. So if you check well, uh, my starting point here and my end point here, my end point is higher than my starting point. Now, let's mark some areas. Now, these areas, the, the peaks of my drawing here, I will call them the highs. So let me take my text here and call this a high, a H for a high, and this another H for another high, and here another H for another high, and another H up here for the highest high. Now, also in my drawing here, allow me name this as a low. This an L represent a low. There's another L for another low, another L, and another L here, assuming this is the last low that we have in our chart. Now, so in my drawing here, I have highs and I have lows. Now, the highs and the lows. If I compare and call this high 1, high 2, high 3, high 4, my high 2 is higher than high 1. So I can say this is a higher high than the previous one. This is a higher high. And this is also another higher high than the previous one. And this also is another higher high than the previous one. Now, this is a low, the first one. And then the second one is a low that is on a higher level compared to the first one. So this is a higher low. It is a higher low. Then this is another higher. It is higher than the previous low. So it's another higher low. And then I have another higher low up here. Another higher low. So it is just maybe in summary, it is easy to say that an uptrend, because this is what we call an uptrend. This is an uptrend. Uptrend. You don't need a genius to know an uptrend. An uptrend inafanyika wakati tunaenda juu. This is an uptrend. Now, And we can summarize this by saying that an uptrend is formed when we are forming higher highs and higher lows. So the first keyword for you to note is the highest. Why am I using all these languages? Because ukiendelea kusoma mambo ya forex utasikia watu wanajaribu kutisha na words like higher highs, higher lows, but simply wanasema in very simple words, tunatoka hapa tunaenda juu zaidi. The highs are going higher, the lows are going higher also. So you form what we call an uptrend. Now, what happens during a downtrend? Now, the reverse is what happens. Now the chart will go down, look like it's going up, then goes lower than the previous low, then forms another high, but that is lower, then a lower low, like that. And the process continues. Now, if I stop it at that point, and let me use this color as, let me try use another color here, like what we can do for the down trade. Let me do red for the down trade, and then sorry, I do um green for the mid trade to match what actually is always in the charts. Good. Now let's label this. We can simply say that this is a high. Let's just label them a high, and we have another high here, another high here of my chart here. Now, the bottom ones are the lows. This is a low here, another low down here, another low down here, and so and so. Now, if I compare now the highs and the lows with each other, starting with the highs, now this high, it looks higher than the next high. So this can be termed as a lower high. This is lower than the previous high. Then we have another lower high here. We have another lower high here. And then for the lows, this being the first low, if I compare it with the next one, this is a lower low. You look at it, it is formed in a lower position compared to the other one. And this, again, the lower one is another lower low. So a downtrend, we can say, is formed when we are forming a downtrend. We are forming lower lows and lower highs. That is the opposite of an uptrend, where we form higher highs and higher lows. Now, if you understand that, and then you forget about all those confusing words, ujue kwa kifupi that wakati tunaenda juu, unaweza elewa hii point iko juu kuliko the previous high. Hivyo, and you can even predict and tell hii ni kitu inaelekea chini, hii inaenda juu. Then you are done and you are good to go. Now, there are what we call indicators that we learn now, details in a lesson form that help us to know, inatusaidia kujua connecting the highest points. Trend line inaelekea wapi? And it's actually that indicator is called a trend line. Nimesave zangu hapa na nitakuonyesha maybe how to do them, ama you learn with time. I want to do a trend line. It's just there. For me, it's now to click that and connect the high points. Now, once I do that, tells me my chart is headed up. That's why it's an uptrend. Now, if I connect the highs on this other chart, I connect the tops, the highs, I will note that it's heading downwards. It's a downtrend. Now, there are other cases where you realize, depending on your strategy, you note that people have different strategies. With the time you learn Forex, lazima come up with your own strategy. But you'll have to learn so much to know the different types of strategies. For me, I'll just teach you one strategy. then the rest tutaendelea sasa kusoma because these are key open just to help you understand what is forex trading. Now, you will realize that there are other people who even throw a trend line on the lows, wanna connect the lower points, and not always that point zote zitakuwa on the same line. You realize that some might be off, but the key rule is always ensure you are connecting most of the points. And once you do that, you realize also you are forming that kind of uh, an uptrend. The same, even if you drew for the lows, connecting them like that, then you're going to realize also if I connect most, like now here I've connected two of the lows, it forms a downtrend. Now that is a simple way on how to maybe explain how to note whether we are on an uptrend or we are on a downtrend. Now the other cases where you might realize, let me choose any other chart here that is not labeled to help me draw for you something else. Now, there are times that you realize the market is not going like we have seen, but it is going in this kind of a move, uh, up up and down, and it's not going beyond that. Now, this is what we call a consolidation. This is where we have uh, some may call it point of indecision, like the buyers and the sellers are like competing with each other, and none has won. You don't give a direction on where the market is headed. So now you also mark this like you've done the other one. This is a this is a high. This other one is a high. This is also a high. This is another high here. Then I want to label also the lows, a low here, and another low here, another low here, another low here, another low here. Now, if you check, I may not have maybe drawn them correctly, but all the lows are on that similar or on the same line. If I was to draw a thread line here, you realize that all these lines are on the same line. They might not be accurately on the same line, but they look like they are all on the same line. The same with the highs on the same line. Now, this is what we call consolidation. 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 Now, if you understand those three things, an uptrend, a downtrend, and a consolidation, then wewe ushaelewa forex trading. Now, let me try get back to the initial, but let me first use this before we even go to the uptrend and downtrend. Now, I want to teach you something that is called support and another thing that is called resistance. And I want to give you a simple story here. Wakati uko chini, unahitaji msaada. Wakati uko chini kabisa, uko na shida. What do you require? Or what do you get from the world? Do you get resistance or you get support? Or what do you even require? You always require support. But what happens when you are very high? Like you are getting a lot of money, you are a politician, you have, fame, you always get resistance. Now you can always use that story to help you understand what point is a resistance point, and the point of support. Now, when you are low, you need support. So hapa, this line is called the line of support. Ni kama inashikilia hii chati yetu isianguke. Then huku chini au juu nayo unaita resistance. Resistance. We only resist the proud, ama we resist those who are coming up. So when this chart is trying to go up, it's facing a resistance. When it's trying to go down, it's meeting support. So you will always hear and you will always use support and resistance to guide and help you in your trading. So understand always the top part, the ceiling is the resistance, the floor is your support. If you're falling down and coming down, the floor is gonna be your support. Now, let me try see whether I can get the other chart I had opened where I've drawn the others. Where was it? Where was it? Where was it? Hoping it's yeah, it is. Good. Thank you. Now the same case like you've seen in the consolidation, the same happens with the uptrend and the downtrend. This upper line here is called the, let me see whether you can remember, try make a guess. Is the resistance? Yes, you're right. Then down here we have what we call what? Down here, sorry, we have what we call a support. Where's my chart book? Supports. The same case now applies to a downtrend. That up here, this is a resistance. And down, the line we drew connecting the lowest points here is a support line. Now, if you understand now again about resistance and support, sasa wewe unaweza pata your own strategy ya trading. Kuna watu wana trade what is called resistance and support. Na sasa wacha tuulizane, wakati unataka kutrade, I will start from behind coming up back from the start. Now, there's something we call an entry. If you want to enter a market na tuseme tumeingia soko ni ya Kiambu na umepata nyanya zimepanda na wewe ni mwana biashara na zinauzwa sasa kwa kilo moja inauzwa 800 nyanya, na unajua most of the times averagely tomatoes go for around how much, say maybe 40 80. Now a kg is going for 800 and you want to buy so that you go sell in another town. Would you buy when the tomatoes are going for 800 a kilo? I know that your answer is no. You would possibly wait until the tomatoes go down to say 20 a kilo. You buy then when it's low to go and sell maybe at markup. Now, if you have that kind of a business reasoning, ujue hii forex ni biashara through demand and supply here, not controlled by any government or any banks. This one ni ile tu sasa tunaonanga those big banks, we call the big boys, coming in and wana influence the market. But this is not regulated. Hii ni pure demand and supply. So let me ask, if I was to mark out these highs of mine, these hit the point one, this ni call point, these are the low here ni hit there, sorry. I want to change this to 2. What has happened anyway? I lost that. Let me try put another one. I name it 2. And I now name this again. Hoping you already understood about the highs. You don't need to go back to that. Let me see if I can name these 3 and these 4. This I name it as a 4. Now let's try to think here together. Unataka kununua at point 1, 2, 3, 4. Where would you buy? Now, would you buy when the market iko chini ama wakati iko juu? At point 1 here iko juu, you would sell. And when you sell, you make a sell here. Let me put an arrow here. Let me see whether I can get an arrow here. We get an arrow. Let me see where I can get an arrow. An arrow, an arrow, an arrow. Yes. Where are you going? Stick here, come on. So, if I want to draw an arrow, I hope it agrees to do that. If it refuses, then we use something else. Ah, my arrow come in here. Where are you? Anyway, it's not working. Let me try use something else. Let me use this. Now, point one, I would comfortably sell. Niuze ndio ikiteremka ifike hapa, I will have made my profit. And then at this point here, point two, I would wish to buy. If we give prices tuseme hii iko at 50 and it goes up to say 60, niuze wakati iko from 50. Let's even use some numbers here. Just allow me do some lines here to guide you. Some lines here just to guide us, and we label them. Sorry, we have why is that line of mine? Good. Why is it? Is one for this other one. Good. Let's assume we just label. You can see my chart is becoming more and more untidy. I hope you'll get my concept here. Let's name this as 10. Sorry, I name this as a 10 and assume this is a 20. Assume this point is a 20. Then assume the point here is a 30. Okay. Now, from a 20 here, point 1, coming down to point 2, which is a 10, I have a difference of 10 units here. If you go back to our introduction, we said the smallest move in the market is called upkeep. And I tried showing you the calculations. You can refer to that on how to get a pip. Now, let's assume now these are 10 pips. That means when you're setting from 20, you went down to 10, you got your 10 pips. Now, again, now you're moving from 10 all the way to 30. Those are 20 good pips. And then you can sell all the way to 4. And 30 to 20, you again have your 10 pips. And assuming now we move from 4 to the next, which would be maybe a 40, that is 20 good pips. And that's why it's always said when you are going along the trade, your trade line or your trade is your friend. You'll always hear those experienced traders say so, that the trade is your friend. So if you are going on the side of the trend, like the trend here is uptrend, an uptrend favors buys. This favors buys. A downtrend favors sells. Sells. So as you're going up, you have realized that when you do a buy, you're getting more pips than you're getting when doing a sell. But remember, you, depending on your strategy, you can also manage to be doing sales even on an uptrend. But it will be not as lucrative as when you're doing buys on an uptrend. Then now, reverse is also true. When you're going on a downtrend, if you're going on a downtrend, then the sales will always favor you because downtrend means we are all and most majority of what traders are doing sales. So if you sell, then you'll be favored by the trend. Now, I know someone is asking, what are you buying and what are you selling? Now, if I go and get into the market and I I have not bought anything and I want to sell. How do I sell something I've not bought? Now, if you have such questions, that means you don't have the basics on Forex. You need to understand that in Forex trading, we don't buy or sell any currencies. What we do is that we predict that the currency is going to either go up or go down. And remember, this is not betting. You know, people compare Forex with betting. This is not betting. This is more analytical. It's something that is predictive. You are able to even analyze the market, and the market moves in cycles. And historically, it is possible. That's why we have things that we call indicators. It's possible even to analyze the market and come up with a formula that this market has always been behaving like this. Like you can tell how the Kenya shillings behaves anytime we have maybe elections in the country. So those are some of the things that the traders, forex traders, use to even predict what is going to happen to that. Say, for example, in this case, I just got into a market and I have not bought anything, but I want to place a sell. Why? Because I'm predicting that the market is going to move from here to here. So based on my lot size, number one. Number two, even before I go to lot size, how much is my stake? How much have I put into my account? Then, how much is my lot size? So you've put some money that you want to use to stake into your prediction. And in this amount of money, you're not trading with a full size, full lot size. You have either a 0.01 of that size, and then the leverage, which now guides you into the amount of money you are able to command in the market. If you're using an average of 1 is to 500, means that you're using your $1 if you are trading with dollars to command $500. Now, later you need to get into details to understand, or you can do your own research, or you can look for me for more lessons to understand that what is the best leverage to use? Is it 1 to 10, 1 to 5, 1 to 500? That is for another class. But for now, you need to understand based on the amount of stake you've put, your lot size, your leverage, and your risk to reward ratio. Then you will benefit based on how well you are able to enter a market and predict correctly. Now, if I did a sell at this point, that means I'm predicting that this market will go down. When I held my trade up to this point, maybe I had drawn my trade lines and I knew this is the support and I knew this would come all this fast. So this is where I placed my TP1 or my take profit. And it came and hit my TP. Then that means I have bagged my 10 good pips. And that means it's my 10 pips times my lot size times my amount, and then I get my profits. Now, the same case when you're going on the buys from point 2 to point 3, I predicted that this is going to go up because I have analyzed the market. And you will come to realize the most important thing for a forex trader who is successful is to take time to analyze the market. Once you understand that and you analyze it for several times, you'll come to realize that it becomes easier for you even to predict where the market is headed to. Now that is our lesson 3 on the trend of the market. An uptrend, downtrend that favors sales, uptrend favors buys. And then let's go back to the other chart and see. I don't know whether I can remember which one I again used to draw. Sorry, to which one I used to draw um the consolidation. I think I need to mark them. This is the one. Now I have number of highs here and lows. Highs here and lows. Where was it? Good, somewhere there. And I want to ask you, is it possible also to trade in a consolidation? Someone is going to say no. But let me tell you, it's possible. There are people who have been trading this support and resistance is on a consolidation. It may not bag you huge profits because you're just moving or waiting to predict that this hits here and goes down to the lows, to the support goes up to, and there are people who even get a lot of money, and those are who the guys we call scalpers. In fact, let me just uh, tell you that we have different types of traders. We have different types of traders. Types of traders. One, we have people who are called scalpers. Now, scalpers ni wale watu wanategea kupata their profits or their entries within a short time frame. Hey, that now brings us to something else that we also need to learn. Let me also mark somewhere something else here. We learn all this together. We have what we call time frames. Time frames. Now, time frames. If I just come up here, hope you can see, they can range from even 1 year, 12 months, 6 months, 3 months, 1 month, 1 week, 1 day, 4 hours, 3 hours, 2 hours, 1 hour, and they can come all the way down to even one. Now, what you need to understand when you are trading higher time frames, you will get very few entries, but a very sure bets, kind of likely predictive moves. But the problem is that the challenge is that you might wait for very long to get a setup. You can be studying the chart for a month plus. Now, these things all depends on a person. There are those people who are favored by short time frames. There are people who don't like watching a chart kwa sababu blood pressure yako itaanza kupanda na hatutaki wewe umalizwe na forex. So you need to study yourself and understand yourself. What favors you? Is it a short time frames? Short time frames ziko na a lot of entries, but pia ya kuoshwa hapo kufagiliwa na account kublow inakuanga rahisi sana. So scalpers are those that enjoy trading on short time frames. Then kuna wengine wanaitwa intraday. Intraday ni yule anawekelea trade ukitaka maybe within the day na ikienda sana by kesho umepata profit yake. Then we have other people who are called the day or swing traders. Eh? No, not even a day. Let me call them the day and even just call uh, positional, positional, positional traders. Now, positional traders ni wale anaangalia hii, anaona hii chart mahali inaelekea, lazima siku moja itarudi mahali fulani. So yeye anawekelea stake yake na anaondokea. Whether it takes 6 months, whether it takes 1 year, he will wait. Now, I know you're asking yourself, should I be a scalper, an intraday, or a day trader, or a positional trader? Let me guide you. It all depends with the amount of money that you have to stake. Now, kama uko na pesa mingi, na nikisema mingi ni in form of mita kadhaa, you can do positional trading. Unawekelea hiyo mita the same way you would have placed it in a bank. Una predict gold is gonna rise from this point to this point. Unawekelea hiyo na unatoka kwa soko, wewe unakaa ukigoja message. The good thing with that is that with a huge account, you are able even to hold, even if it goes towards the negative. It can hold for some time before now it reverses to where you had predicted. Now, for scalpers, you need to be very keen and on the chart because unaweza wekelea within few minutes ishaenda the other way around na account yako imefunga. So you have to know what type of a trader will you be. But that will now come with experience as you first train yourself through demo. I repeat again, before you go to a live account, tafadhali train, even if it takes you 2, 3, 4 to 6 months or beyond until you're comfortable. Don't stake huge amounts of money into a real account before you've understood what you're doing in Forex. Na greed, tafadhali. There are two things that zinasumbua traders. Two things zinasumbua traders. traders, um, traders uh, downfalls, or I don't know how to put them. Number one, it's greed. Number two, kuna wale wanasumbuliwa na kitu inaitwa fear. Don't allow greed, you know, hold you that you're so confident with the market. Huwa wanasema wale trade for some years that soko si mama ya mtu. Hii haijui, you can think you've analyzed the market, umeelewa vizuri, inataka kupanda from hapa to hapa, iamue hata haipandi, iseme okay fine, you thought you are right, na umepraise nini yako hapo, iamue hata tuende that direction. And many times that's how forex inakuanga. Unapatanga umefikiria umeianalyze vizuri, but imeamua tu after tu umeanalyze, umefika hapo ukafikiria it was a consolidation, itaenda ikicheza hapa, inaamua I'm going on a down trend now. Ama ikifika hapa inaamua mimi hata sirudi huko juu ulikuwa unafikiria, hata you are predicting I was to go up, mimi inasonga juu na iendelee kupanda, iendelee kupanda. So you need to understand, sorry, that greed will never lead you. Usiangalie forex like a get rich quick scheme, because if you do, you will just lose a lot of money. Just concentrate on grooming your strategy. Strategy yako ukifanya na just maybe say $100, now you are getting yourself maybe say $5 a day, and you become consistent. In fact, you should not even be targeting the amount of money per day that you'll get. Your target should always be the number of pips. Kama pips zako unatafuta 5 ama tuseme 10 per day, when you get your 10, unatoka kwa soko, you don't overtrade, and you wait for another day. Now, what happens is that once you start realizing that I am now consistent with the 10 or the 20 pips per day, then you add your stake. If you had 100 USD, then you can add it to 200 gradually, slowly. And then now you will still target the same 10 pips. You are not changing your strategy, but you realize now your profit now has grown from the 5 to something higher in the same proportion. And that goes on until one time now you'll be able to comfortably stake even to 10,000 US dollars. But you don't now just add, another $100 to make it $200, and you now want to target to get 1 million in one day. You're going to blow the whole amount. That is great. Then again, don't develop fear. Fear is where now you cannot even enter a market because you're fearing that once I enter the trade, I have noted it just goes the other opposite direction. Now you'll come to realize in higher other lessons that I don't know why when you just enter a market, it just tends to move to the opposite direction first. If you are right, it might go down and then turn towards your predicted side. So you need also to have patience. Now, allow me stop there for this lesson because I don't want to make it so long, and catch up with us on our lesson 4 when we are looking at now the real charts, and when I'm training you on the ICT concepts, the indicators, the order block, uh, FVG, that is a fair value gap, and so many others, so that now you can get your entries and start trading on the demo.